Hi, everybody, and welcome to the Call Girls podcast. Today we have a special guest.
Okay.
Damn, I had a really good question for the opening. Do you want to go use the bathroom while I try to remember what my opening question was?
Is that your opening question?
Welcome to the Call Girls Investment Club podcast. This is Diana Becker, and this is my son.
I'm Michael.
Supposed to say your last name.
Oh, I'm Michael. I'm Michael. What do you mean when I say my last name? It's obviously going to be Michael Becker.
All right. Yes, it is.
You hear about Netflix? Man.
Okay. Tell me about Netflix. Okay, we're going to start with current events as usual.
Okay, I don't know even how I should begin to put this, because this is a complicated issue, and as usual, I've tried to take a neutral stance on it, as I always do. Netflix recently released a movie called Cuties, which is a renamed version of, from what I could tell, a French movie that was in the Sundance Festival. Oh my god, the controversy over this movie is like a train wreck to watch, because what the movie is, it is a story about girls living in, I think, India or some place outside of America, and basically seeing American culture such as like twerking and like sexual dancing and all that stuff.
TikTok.
And so the entire movie is about these 11-year-old girls twerking. And it's like, oh my god. What the score is on Rotten Tomatoes is critics have given it an 88% and the audience score is like 4%. Because everyone who's seen it is like, oh, what the hell is this? This is sexualizing 11-year-olds. And from what I can tell, the film itself is not intended to sexualize these girls. It's intended to kind of point out that aspect of it. Now, Everyone's saying, cancel your Netflix subscription because Netflix is supporting the sexualization of 11-year-old girls. And it's like...
But it's supposed to point out the fact that this does sexualize. Okay.
Yes, but at the same time, you've created a movie in which that happens.
Did you watch the movie?
No. And that's exactly why I didn't watch the movie.
No.
And from what I've heard, it has also had a negative impact on Netflix's stock. And
dang, I don't know if it did.
Now.
I actually have not been. Do you have your phone?
I do not. And I don't know. Like, I know that they're down. Like, they're down considerably over the course of the past week.
So the Netflix ticker is NFLX. And it's pretty much, well, the whole stock market went down this week, so that doesn't really tell you anything.
Yeah, it really doesn't.
It's actually very similar to the stock market. This is Friday. It went down and then up. And then Tuesday, because Monday was a holiday, it went down. Wednesday it went down. Thursday went down. Friday. Okay. The rest of the stock market went up on Tuesday, so yeah, it kind of went down. Here's Market Watch. I don't know. They're not really acknowledging it.
They haven't been. Their latest acknowledgement was, this is an award-winning film, and we want people who are criticizing it to actually watch it. Except, I'm not actually going to watch it
like a perv.
Because the content ratings tell me I would not enjoy this. There's stuff in this movie that I would not like.
Okay, I'll watch it. I'll tell you if I think you'll watch it.
Okay, okay. If you're willing to bite the bullet on that one, I'll let you.
I'll watch it. I've seen 11-year-old girls' boobs, so.
Well, you're a mother, so.
Yeah, there you go.
Yeah.
Do you know what Nikola is? I'm changing the subject.
It's a good thing to change the subject. Let's talk about something else.
Do you know what Tesla? Well, do you know what Tesla is?
Oh my God! Is Elon Musk doing another goddamn play on words?
No, somebody else. Okay, there's this company named Nikola, which is the first name of Nikola Tesla.
No, it's Nikolai Tesla. Is it Nikola?
I thought it was Nikolai too. I don't know. So Nikola is the name of this company, and basically on Tuesday, not Monday. We didn't have a Monday. On Tuesday, the stock went up 27%. So what this is it's an alternative energy car company, basically, and they're making. So I got to tell you this whole story.
Oh no, it's the two competitors, Nikola and Tesla.
Okay, so they were on their own. They were doing their own thing using hydrogen cells instead of electric, battery stuff. And then they sued Tesla because they said that Tesla stole their truck design. And I don't know.
I don't think the
This was a while
Cybertruck
back.
design is something that can be stolen. Like, at the very least, I don't think the outer design was something anyone could have dreamed of except for Elon Musk himself. But
Well, I have not researched this because, as you know, I kind of took a break from Tesla stock. But on Monday, their stock went up because supposedly they're getting into business with GM, which is General Motors. They have a kind of a bad rep, but a new person is in charge of GM. I think it's a woman, but I forgot her name. They're trying to commit to doing more alternative energy, green energy automobiles now. Honestly, Tesla was there first. Okay, I'm not a believer in Nikola, but some of my friends who were early Tesla investors invested in Nikola. So I'm like looking at this on Tuesday, and I'm like, holy crap, do you still have your Nikola stock? Because 26% is like ridiculous, right? Really high. So if they're getting into business with a big company like GM, that gives them all this, believability.
right.
But I told my friends, actually, I'm gonna say my victories and my mistakes this week. So one of my good things that I did is I told my friends, don't chase this. I said I wouldn't chase this because I don't believe in Nikola that much. I don't believe in their story. I just gut instinct. Here's another thing. Their stock went up so high, their value of their company was worth more than any other automaker besides Tesla and I think it was GM, which you haven't even heard of them. You've heard of Ford, right?
I know what Ford is.
Yeah. So
I've
why
heard
would a
of General
company
Motors.
that's never made a working car have a value more than these places? Now, this is very similar to when Tesla was starting up, but Tesla had working cars that people loved. So anyway, the very next day, this guy came out from this company called Hindenburg. Do you know what the Hindenburg is?
The big blimp that exploded.
Yeah, so this company is named after that. And this is a company that basically points out the flaws in people's stocks and they short sell them. So
I like that.
We were talking
I
about,
like that name. That's
So-
a good name.
It went from 26% up. It dropped like a rock, like 17% one day. And the guy basically published this report. This very next day after this good news, he publishes this report about how they lied about everything. They did a video where they showed the truck driving down the road, right?
Right.
Turns out it didn't work. And they drove it to the top of a hill and let it coast down this very low-grade hill, and they filmed it for that, and it wasn't real. And then on the stage, they had this working model of the truck, and it wasn't really a working model. They had a electrical cord coming up through the floor to make everything look like it was working. And there's all these other lies. So basically, this company had this huge, huge value, and it doesn't even have anything working yet. And GM isn't saying anything about. They made a deal with GM, and GM has just not said anything. They're pretending like none of this happened. Okay, so this is a short
this
seller.
entire company is just a money laundering scheme.
I don't know. I want to root
God.
for. I want to root for alternative energy, but Tesla's already in the market. Tesla is already making all these things, and for them to compete, it's like you're too late. I don't know. So I told my friends not to buy it on Monday, and sure enough, on Tuesday it crashed. So then Wednesday, I'm sorry, it wasn't Monday. It was Tuesday. I told them not to buy it on Tuesday, and then Wednesday it crashed with the Hindenburg's report. So then the head of Nikola.
I can't get over that name. It's like, what's your company do? Oh, we evaluate ships and see if they're good to sink or float. Okay, what's your company called? Titanic.
Yeah, I know, really. Well, Hindenburg is trying to sink stocks. I think we talked last week about commentators trying to manipulate stocks, and I said something. This is so reminiscent of Tesla. I actually thought about investing in Nikola because here's what happened next. The next day, the head of Citron came out with a report, and Citron was the famous company that was always trying to destroy Tesla. And what they do is they drive the stock down with a bunch of fake news. And then the one day where they'd come out with their big interview and their papers and say all the terrible things about Tesla and totally drive it into the ground, that's the day they'd buy and cover their short. So basically, Citron piled on. They're all trying to make tons of money off this deal of forcing the stock down. So it dropped another, 9% or something. And that's where we are now. And when I saw it was Citron, I thought, oh, maybe I should invest in this because maybe it'll pop back up. But then I found out all this stuff about it really being a bunch of lies behind this company. And so I decided that might not be, and the valuation is huge.
How credible is the Hindenburg?
I never heard of them before, but I thought the name choice really tells it all. They're basically trying to profit off this.
I'd look into that more.
I mean, it could be a bunch of lies. So
it sounds, I don't know.
When they did this to Tesla,
have you looked at the original like footage or whatever, and actually can you see the wire?
I have not researched this, but the engineers interviewed supposedly have been talking to other companies and admitting the same thing.
Really? Okay then.
Yeah.
Okay.
Oh, Tesla. There's news on Tesla too.
Ooh boy.
Bad news.
Oh no.
They crashed like 20%, maybe. I can't remember how much they went down.
Time to buy.
I did. Okay, the bad news was everyone is expecting Tesla to join the Standard & Poor's Index, which is basically Tesla has become a big enough company that they're considered like a basic American company. So Standard & Poor's puts together a group of names of the best companies. And Tesla had reached all their criteria, so everyone assumed they were going to join the Standard & Poor's Index. And Standard & Poor's came up with their index on Tuesday, and they didn't list Tesla. And because of it being included, people thought it would be traded a lot more because people buy these things called ETFs, which are baskets of stock.
Right.
And so anybody buying the ETF would be buying shares of Tesla every time they bought the ETF. So if they're included in the Standard & Poor's Index, that's one more index where everybody's buying more stock. But Standard & Poor's system, failed, So
wait, so I thought they went up to Tesla with the offer, and Elon Musk was like, no.
So anyway, the fact that they didn't get in, the stock just dropped like a rock. I was shocked. But the fact that it dropped like a rock, Standard & Poor's comes out with their index. I meant to research this too. I'm a little tired this week. I didn't make any money this week. I just broke even, so I'm like,
that's fine.
I'm low energy. But
it's a weird week.
Well, a lot of people lost a lot of money this week, so to break even is a victory, in my opinion.
Good then.
Just first do no harm. When you're working on your portfolio, first do no harm. Try to at least break even. Mm. If you took all the ups and downs of the market and you just eliminated all the downs, you'd make so much money. Tesla dropped so far and it bounced off its 50-day moving average. The 50-day moving average is basically you take 50 days worth of data and crank it through a spreadsheet, and you can come up with a number where when people see it reaches that number, people start to buy because they figure, okay, it's going to bounce off here. And it does usually. If it breaks through that going farther down, then they look at the 200-day moving average. So the fact that it bounced off the 50-day moving average, I thought this is a good opportunity to buy. So I bought it, and I made a nice profit on a couple days trading, and then I lost a little money on something else. So I'm still even. So that was Tesla.
What else is in the news, or is that it?
There's this company called Softbank.
Hong Kong.
Okay, I'm just going to hold my paper here and read this because there's this company called Softbank. It's an ADR. Remember we talked about foreign companies? It's called an ADR when the American Stock Exchange has a sort of surrogate version of it. It's trying to copy the price of the ADR.
Right,
yeah.
right.
So this isn't really their stock that's trading. It's the American version. But it sold off big on Tuesday because there was this rumor going around that this guy in charge of this fund, it's called Softbank. I don't know it well, but it's out of Hong Kong. And this guy named Masa Son, S-O-N, has been buying billions of dollars of options in all the high-flying stocks like Tesla, Amazon, Microsoft, everything. And those are all the ones that crashed in the last 3 days. So everyone's thinking this guy is risking tons of money. And he just lost his big bet, It said that he bought $4 billion worth of options on $50 billion worth of stock. So you know how when you buy an option, you can get 10 times the stock for 1/10 the price. You know what I mean?
He's been getting a stock trading advice from Reddit.
So I was like, oh, wow, he really should sell those options soon. But actually, I reread the article, and this is the weird thing about this wording in the article. It says they're tied to underlying shares it had earlier purchased.
Insider trading?
No. So what this means is he already had these shares of stock, and he bought options tied to the shares that he bought. So here's my question.
What? You can buy options to buy the stock from yourself.
No.
No.
That's the thing. When I reread this, I was like, wait a minute. Maybe he bought puts. Puts are bets against yourself. So basically, he might have bought. I don't know. There's another thing I didn't research, but you know what? This raises a lot of questions for me. I'm wondering, did he buy bets against the stock he held because he thought it would go down, but he didn't want to sell the stock right then? So he might have bought short-term put options. In which case, he just got super rich. So I'm thinking whoever did this.
It's kind of important to get that distinction.
Yeah,
where did this info even come from?
It's a rumor, and they were publishing it, and it's like the stock went down 7% on.
It doesn't tell you if it's a put or a call.
Yeah, so here's what I'm thinking. I'm thinking I should research that and find out, because if he bought puts, that means a 7% drop is out of line, and it should actually have gone up 7%.
Right.
You know, I just realized all our news had the air conditioner running in the background.
Oh no!
Sorry about that.
That'll make some tinny audio.
Anyway, that's enough news. Let's talk about how to trade stocks. What was your experience this week with setting up accounts and funding?
I went
It was
back
horrible,
into my
wasn't
Robinhood account.
Yeah, you know.
And that's it.
Yeah, we tried to get back into your Schwab account. That was like a real
I have not.
buzzkill.
I learned something. If you don't trade anything in your Schwab account for 6 months and you don't have any money in it, they just delete your account.
And you can't get it back.
Yeah, you got to create a new one.
And you went to so much trouble to set it up.
Not really.
But honestly,
it was more you helping me.
I went to so much trouble setting it up. Didn't I even lie about your options experience on there?
Well, probably because actually I have options experience because I learned it from you.
Yeah, so maybe it's not all that.
So it's not a lie, it's the truth.
It's a stretch.
Yeah.
Well, I got a question though. You told me earlier you looked at both and you thought the Robinhood account was much more accessible and easier to figure out.
Well, yeah.
So I don't know my way.
Schwab is like 90s web design from what I can tell. It feels very dated, whereas Robinhood, it feels very fresh and modernized, but the service itself, I think Schwab is better.
Well, yeah, because of what I told you. Yeah, when I buy stocks on Schwab, they get a really good price. And I've bought stocks simultaneously on Schwab, E-Trade, Scottrade, and TradeStation. And TradeStation shows you like all the bids and all the asks and all the sales going through. And I could actually see all my trades going through in the different amounts. And the other companies got me bad prices. And it turned out costing me a lot. It's like if you buy a stock and it goes up $1 and you make a certain amount, if you buy it from another company and they already charged you 50 cents more, you didn't make the profit.
Right. I think, yeah. I noticed that was a problem I had with Robinhood. Because it's like...
You didn't get the price you thought?
I don't think it was that I didn't get the price I thought. It's that just like in general, I just think their prices weren't as good as like a Schwab prices maybe.
Well, they're supposed to quote the same price everywhere, but
they
have these things called market makers supposedly.
Yeah, I think my prices on Robinhood were a little below what was stated on the line or whatever.
It could have been it could have been the market was moving, and when you bought it, it moved. Well,
maybe.
Okay, with E-Trade, I noticed something. I would put in an order. The stock would be trading for like $5, whatever I'm buying or selling. And I'd put it in order with a limit order, which says I only want to pay this much. And I'd put it in for $5, and E-Trade wouldn't sell it, wouldn't let me buy it. And Schwab would. So then I'd raise my price up to $5.10, and then E-Trade would buy it. And they'd say, oh, you got a price of $5.10. But it's like, they sucked.
Yeah.
So that's why I like Schwab, and also I'm used to them. So I look at Robinhood and it looks really intimidating.
Right. Okay.
So you're going to be the Robinhood expert.
You look at Robinhood and you give it the same look that you give when I give you a PlayStation controller.
Oh, I know. I couldn't even figure out how you trade stocks on there. You told me.
I couldn't figure out how you trade stocks on Schwab.
You told me to. Oh my God. Okay, so that's good. We each have something.
It's two very different interfaces.
So the next step is going to be to fund it. So let's send $1,000 over there. I'll lend you some money so you can.
Oh boy.
Well, I know you have money, but you have plans for that money. So.
I do, kind of.
So that's fine because this is really you doing it for me.
Okay.
You can give me the money back if you make a profit. You can give me some back.
Okay.
There's one other thing I wanted to tell about with trading, this thing called a stop order. I know I'm getting into a lot of intimidating stuff. To tell the truth, I looked up the internet. I looked up options spreads, and I didn't want to bother logging into Schwab, so I just Googled it. And I saw this page full of numbers and colors, and it was totally overwhelming. But if you stick with us, you will understand. You will figure it out. It just take one step at a time. We're just taking one step at a time. But I'm going to talk about stop orders because somebody asked me about it last week. Actually, they recommended it a couple weeks ago. And I thought, I have this program where I'm buying and then selling when I make 10%, buying, and then I just put it in order for cash out when I make 10%. And I thought, this market was going up so much a couple weeks ago. I thought, I'm missing out on all this profit. So I decided to try doing a stop order where it basically, when the stock falls below a certain point, it sells your stock. I thought I was going to be real smart. Buy it when it gets up above my price. I'll put it in a stop order and keep moving the stop number higher and higher with the stock. Sounds good, right?
Well, yeah, but
because I could follow it up 10%, 20%, 30%, and just keep raising my stop. And then when it falls, it'll fill, right?
Right.
So I learned something.
So if you put it up above where it is, then
it would immediately fill.
Oh, it just immediately fills.
Yeah, you're trying to get out of a stock when it's falling below a certain level.
And it just detects, the stock's below that level, time to sell.
Yeah, so it basically just takes whatever it can get at that point.
Right.
So I told the people on my Facebook club, I don't use stop orders, and it never works out, But then it's been years since I did it, and I thought this might be a good strategy, so I thought I'd try it again. I actually took a class in Chicago where I was studying stock trading on the stock exchange there.
This wasn't recently, was it?
Oh, it was about 2 years ago when I went to Chicago.
Okay, so not this year. Because I was like, when did Mom go to Chicago?
Yeah, this was years ago. And these professional traders, I did take this class, and they tell people to put in these trailing stops, which basically every time the stock goes up, the trailing stop goes up with it, right?
Right.
And so I thought, this is a professional way to do it, No, it doesn't work. Hold on. Kitty.
Hello.
No, I can't have you on the show.
No. How could
show?
you do that to our poor kitty cat?
Oh my God. Okay. Okay, this is a different cat than the other one.
Do you have anything to say about trading stocks?
She never says anything.
Please. She doesn't say anything unless she wants something, and then she says a lot.
Okay, so can I go on?
You can go on.
Okay, so I went to Chicago, and I learned from these professionals to use trailing stops, right? So I thought I'd try it again. And you know what I found out in this crazy up and down market? When the stock market's going down, basically it'll hit your level only when everyone's panicking and selling and nobody wants to buy, and you'll get a price that's like $5 or $10 below where you put the stop. You'll basically always get your worst price that you say, this is the least I'd settle for. You'll always get at least that low of a price. Oh, here's the other thing. So the options have a bid price and an asked price. So basically an option could be selling where somebody says, I want $14 for it, and somebody else says, I'll only pay $10.50, right?
Right.
So that's huge. That's a huge spread, they call it, the difference between those two. So I put my stop in, and they basically filled it as if that was the asked price. They just it was trading for $14, and I put in $10.50, and they basically filled it at $10.50, and then the price shot right back up to $14.
Yeah.
It was horrible. So I don't recommend stop orders. I don't recommend doing anything fancy. You could become a millionaire just knowing one little trade and one little stock and just be well versed on that one thing.
Right.
So I don't recommend stop orders. Let's talk about trading psychology and mistakes and things like that, and keeping up your confidence.
Okay.
Do you have any trading experience?
My trading experience is nothing, but I do think that I understand trading psychology, because one time I did try to do experiments with Robinhood, and it was like, oh my God, this is you suddenly become aware of how bad you are at trading when you start trading.
So what happened? You panicked when it was low and bought when it was high?
Exactly that.
That's exactly what's going on in the stock market this week. Everyone's doing that. I can see it because like the prices, it'll go up, 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 up.
Like,
and then it'll crash. Everyone will freak out and sell. Well, you're not alone. Kramer was a joke. I'm sorry. I love Jim Cramer, but I keep calling Tuesday Monday because of the holiday. Tuesday, the stock market was going down for the third day. And, this was one of my victories for the week. I told everyone it was going to be a 3-day decline, and then we'd bounce. And because everybody, remember I said how the big companies were selling stock and they do it over a period of 3 days?
Yeah.
And then they stop, and then the next day it went up. So the day it was going down, Tuesday, Kramer said...
Nobody expected it to be a 3-day decline.
Well, actually, I told you about this, didn't I?
You did tell me about this.
The next day when it went up, Kramer said, no one could have guessed this. No one knew it was going to end today. But it's over and you can start beginning to buy things, And I'm like, I knew. I told everybody. And then the next day it went down again, Thursday. And then he's like, well, I did tell you to take something off the table. I've been telling you for weeks that it was going to go down.
Oh, no.
And then today was Friday, and it basically went up and then down and then up and then down and then up. So basically...
It's taunting him specifically.
So you know how I did all those really long, drawn-out spreadsheets with 670 days, trading days for years, and I figured out these patterns, right?
I'm well aware.
Well, I did happen to notice Thursday evening, I was looking at the patterns, and this is really, really similar to the patterns in February when the stock market crashed. And basically it crashed down. It went up for 3 days, or it went up for a few days, and then it crashed much farther down. And I decided I didn't want to be a part of that. So this morning I just sold everything like market order. So
you're predicting the entire stock market's going to be headed down more?
I'm saying... I don't trust it. I mean, we don't have the news we had in February. In February, it had traded up really high. Oh, yeah, it's just like that. Because in February, we knew all about the coronavirus, and the stock market just kept going higher. It's like everybody was like, oh, I'll be the last one out the door, you know? And then all of a sudden, when they decided to start like acknowledging the coronavirus was a bad thing, then it just went way down, and it hit this level. It'll hit these levels where like the Standard & Poor's, some round number, like 3,200 or whatever. And, you know, I actually have the level here. And once it hits that level, it pauses because people like round numbers and they think that it's going to stop there, but it doesn't. It just pauses and then it goes down farther.
You've got your computer backwards. There you go.
Makes sense. So I predicted to my group on Friday of last week, whenever it started, Thursday, it started going down, and I said, okay, I think it's going to go down to 3,300 and pause, and then go down to 3,400. And it did exactly that. And I told you that last week, right? Oh, that must have been the week before or something.
No, I don't remember this one.
I don't know. Maybe I'm thinking of my Facebook club. But then I'm looking at it now, and I'm looking at the levels, and I have a new prediction. It might go down. I can't log into this fast enough to suit me, but I noticed in February, the peak was at 3,200. I think I got that right. And I feel like now it's coming down. I feel like it'll go back down to that peak. So sometimes the ceiling, I know why I keep thinking I told you this last week, because I was telling my Facebook group this, but the peaks from the past become the floors of the future. So like, I'm feeling like there's this level. I can see where we dipped down to this level before and here again. So if it goes lower, I think it would go to 3,200, which is really low. But I think people could freak out. It's September, which is a typically down month, which is the perfect time for you to get your account funded, because by the end of September, you can put your money in and just make that.
By the end of
normal.
September, I will have lost all my money.
So I say, put your money in, watch it, but maybe don't buy anything until we get confirmation that we've hit the bottom, you know?
That sounds like a good plan. And the stock that you want me that we're talking about is the TQQQ, right?
That's the one I like buying. Do you really want to get into the most risky one first? And also, do you
is
want
that
to
the most risky one?
Well, it's not that risky, but it's triple leveraged, which means you'll get 3 times the feedback about whether you're doing well.
I need that feedback. Feedback is important for game design.
So like when Tesla goes up, the TQQQ goes up because it has Tesla in the NASDAQ. You know how I said they didn't get in the Standard & Poor's, but they're in the NASDAQ index. So every time someone buys this index fund, they're buying some Tesla. So like I didn't want to get left out of Tesla. That's a thing, feeling left out. But I buy this NASDAQ, and every time Tesla goes up and I'm missing it, I'm always telling myself, well, I'm not really missing it because I'm in the NASDAQ. So fear of missing out, got to fight it in September. Every time the market goes up, like today, I'm sure people had 3 times, oh my God, it's going up now, you know. I kind of avoid Fridays often. Like 2/3 of the Fridays are down and 1/3 of the Fridays is like hugely up, you know, but I really didn't feel like it was time yet for a hugely up Friday. So I just backed out of it. So, what are your goals for trading? Do you want to learn how to trade options? Do you want to just dabble in it?
Dabble and make a profit. That is my goal right now. And I think if I can make a profit, then I can start actually like getting into it more.
So you want to have something.
Yeah.
So
I'm going to just do TQQQ because I've given up on cryptocurrencies because those things are whack. And I've decided I'm going to avoid whack. I'm just going to go for the stock standard. I'm going to go for TQQQ because in game design, you can never get enough feedback. And we'll just see where it goes.
So, yeah, I know you're used
lose
to my
3 times as much, but I'll gain 3 times as more.
Well, did you want to trade options to start, or do you want to just buy the stock?
I want to just buy the stock.
Yeah, I think that. Okay, so the TQQQ they keep saying is not designed for buy and hold. I don't know why they say that.
Well, I think that makes sense. I think it's more of an options stock itself because if you think about it, when you have triple leverage, options are less risky because with an option on triple leverage, it's the same risk but 3 times the profits. But with regular stocks, it's 3 times the risk.
You know, that's actually a really good way to think of that. So, well, I don't know how to tell you when is the good time to get in, but we can discuss it again next time because
we'll
I think
figure
we
it
have
out.
time.
Let's wait for the bottom and then we'll figure it out.
So here's the thing: if you don't have your money in your account, you'll miss the bottom. You know. This happened to me a couple times. I tried to put money in my account and they put a hold on the check or whatever, and I'm waiting. You know.
Yeah.
So.
Okay.
Okay. Well, see you next time.
I will see you guys next time. And tell me if anyone likes me on this on your group. 'Cause I want to know if I'm making an impact or not. I want to know if people like my measured approach stuff.
Well, you're keeping me like sane, sort of, and not going off into the stratosphere with all this terminology. Like you stop me when I say something that's unfamiliar, even though you do know a lot already from having heard me over the years.
Yeah, that's fair.
And you also have a good perspective. So
okay.
Okay.
I'll see you later. Bye.